If you are thinking of selling your business, there are a number of things to prepare to increase value and make the experience less stressful. Plan early. 3 to 5 years out isn't too long. Many adjustments to managerial and financial aspects of your business will take time to put into place, but certain tax saving strategies may take even longer. You can save significant tax if you plan ahead at least 2 years before you sell. Review the legal structure of your company and its ownership. Try to ensure the corporation is clean, ready to sell, and positioned to maximize the ability to sell shares and utilize your personal capital gains exemption. Consider alternate sales options. Employee ownership is becoming a popular vehicle that may allow you to keep the spirit of the organization completely intact. Understand the full range of succession planning issues, on the business side as well as on the transaction side. While the transaction pieces are critical, the longer-term business issues are where you will really make the difference in the ultimate success of the transition. Some specific issues to look at is what you do and how you do it. Companies that provide a unique product or service or that employ a unique process are more appealing than commodity businesses where there's greater competition. Pay attention to where your sales are in the product life cycle as well. If you are overly reliant on dated technology, your primary business is exposed to elevated risk and consequently has lesser value. Succession planning isn't always a fun exercise, especially if you've built the business from scratch. Actually parting with your company can be even harder. As you're looking to find a buyer or a successor, don't just wait for them to come to you. Invest in the legwork to identify, qualify, and prepare potential successors. This may include redefining roles and responsibilities, training, monitoring, and implementing dispute resolution mechanisms. Determine your optimal buyer. The strategic acquisition of a specialized equipment or intellectual property, for instance, may be of higher value to some buyers than to others. Consider your marketing strategy as you approach them. Other issues to consider is your management of the business. Do you delegate? Do you have good bench strength? Can you personally take a 2-month holiday? Will your business still exist when you get back? If the answer is no, it'll be harder to sell or transition your business. From a financial point of view, ensure your bottom line is healthy and not clouded by personal expenses. Your business will be valued based on a multiple of sustainable income. You need to prove your business makes a good profit and that it is sustainable without you. If you're funneling your personal expenses through your business, consider this. Doing so might save you 9 or 10% tax. That means if you pay for $10 in personal expenses, you'll save $1 in tax. But if you assume a conservative multiple of 3 times your bottom line, that could cost you $30 when you sell. Another factor is your customer mix. Do you have 1 or 2 customers that are more than half your revenue? Buyers prefer a diversified customer base. Unless you have solid contracts in place with your larger clients, the value of your business may be less. You may also need to provide personal guarantees and long-term track records for this.